Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abasi. Good morning, Vimbai. Good morning, Rufai. Good morning to all our viewers out there. As always, we begin with oil. With all the geopolitical talk of missiles and nuclear war and la. Oil still hasn't moved, right? So you're still at, 73.24 for Brent crude. West Texas Intermediate, that's North American grade, still at 69.50, so that's still under $70. And Nigeria's 2024 benchmark, you see that's 77.96. Now, the head of the Nigeria Economic Society has said that our 2025 benchmark of $75 should be revised down to $70 to make room for any shocks in the oil price. And with everything we've talked about with where oil could be at the lower end in 2025, that's probably some good advice. He also mentioned that our 2025 budget in dollar terms is at its lowest point since 2018, which is a very good point considering the exchange rates for 2025 compared to 2024. We move to Asian markets now. Mixed bag. T2 indexes in negative region and 2 indexes in the positive. Shanghai Composite Index up by 32 basis points this morning. The Hang Seng, however, down by 11 basis points. The Nikkei 225, we're going to get to Japan export numbers. I previewed that yesterday. Down by 11 basis points and, down by 35 basis points, excuse me. Kospi is up by 51 basis points. So let's get to Japan. They did release their trade numbers for October. I mean, this is just for 1 month, just to show you how powerful the second largest economy in Asia is. Look at that. Exports, it was in yen, so we converted at about 153 yen to the dollar. $61 billion of exports in just 1 month, climbing by 3.1%. Prior, I think it was August, it was at a 43-month low, so it did rebound. Imports at 64.6 billion, rising by 0.4. But you can see that Japan is still in a trade deficit. This is the fourth month of trade deficits in a row for Japan. Just digging further into the details, because of all this talk about tariffs and trade, that's what's going to dominate 2025. So you can see there, the exports for Japan were driven by chip manufacturing equipment, mostly to China, because you know that the U.S. has put curbs on chip exports to China. So China is looking for chips elsewhere around the world, although Japan is, has aligned itself with the U.S. in trying to limit those chip exports. But again, these are chip manufacturing items, so semiconductor manufacturing item exports to China. Also, pharmaceutical products, those pharmaceutical products going to the United States. And on the other side, on the flip side, imports were driven by personal computers into Japan, coming from China. UK inflation, we got that not too long ago. It just came in this morning. Over in the UK, headline inflation, the Bank of England, others did say that inflation was going to pick up a bit. So 2.3% year on year. The expectations were for 2.2. Core inflation, which strips out volatile food and energy prices, year on year, 3.3%. The expectations were for 3.1. You can see the Bank of England's target there at 2%. We'll see what happens at the next meeting. We move over to the G20, which of course has rounded off. Brazil has handed over the presidency, Luiz da Silva handing over the presidency to Cyril Ramaphosa. South Africa becomes the first African nation to preside over the G20. There's about 140 meetings planned for 2025. Take a quote from Cyril Ramaphosa. Says it's an honor to accept on behalf of the people of South Africa the responsibility of the presidency of the G20 for the next year. South Africa firmly believes that civil society serves as a bridge between the G20 leaders and the people who have greatest interest in their deliberations. And by the way, we are expecting inflation data from South Africa later on today, and tomorrow there will be a rate decision. We got a rate decision from Angola yesterday. Angola held rates where they are. So South Africa, we'll get a chart tomorrow showing you the deceleration and the path of inflation in South Africa, which has been coming down. So it is expected there could be a hold or a rate cut tomorrow. We'll hear from Leseta Haniego, who is the governor of the Reserve Bank of South Africa. We'll round off with Zimbabwe and Nigeria in particular, but rather Zimbabwe in particular. And look, if you've noticed, I've been talking about power. That's the linchpin for our economy. So Zimbabwe, they hiked tariffs not too long ago. They increased tariffs. They did their own band A, B, C, so on and so forth. I mean, look, Zimbabwe, not that big of a country, only 16 million people, $24 billion economy. but they have power outages, so power shortages. So they did hike tariffs, and lo and behold, guess what? Investments are now promised to go into Zimbabwe to the tune of about 3,000 megawatts worth of energy projects. And so right now, I think it's the Kariba station. It's been impacted by droughts, so not much hydropower behind electricity generation, only doing about 1,100, 1,200 megawatts of output, which is about half of the needed demand. And by the way, the mining sector in Zimbabwe is growing. I think it's compound annual growth rate of about 9-10%, which means, according to experts there, the mining sector alone demands about 700 megawatts, and that is expected to climb. So Zimbabwe has to ramp up its power. So take a look at this quote from Sydney Gata, who's the chairman of the Zimbabwe Electricity Supply Authority. He said immediately after tariffs were corrected, that is cost-reflective tariffs, market-driven tariffs, we called industry, mining in particular, and told them that now they can also invest in electricity infrastructure. But crucially, look at this. He says miners were told to stop expecting the government to underwrite the energy risk for their operations. That means basically subsidies. To our surprise, there was a lot of positive response. So look, again, I'm just really on this power thing. It's the same situation we have in Nigeria. Yes, we've hiked tariffs. By the way, Zimbabwe hiked those tariffs in December of last year, right? So this is it's a process that has to follow through. But we talked about meters yesterday, the lack of meters, the value chain. Nigeria desperately needs investment in our power sector, and the tariff step, market-driven, is at least a step in that direction.
Why is it that when Zimbabwe cut their own, they saw investment? You're saying about 3,000 megawatts of people want to invest. Where is the investment here in Nigeria? Since they've put some people in band A of no lights. They've put us in band A of disaster. We are paying through our noses, but there's no lights. Where is the investment? The minister the other day was saying they need $10 billion. And I said, you should go and look for the money. It should be in the finance sector. So where is the investment in this sector? I think that's a question we should be able to ask them. Why is that it's only Nigerians' own? Where is what's the Siemens deal like as of now? The Siemens deal was supposed to bring about 20,000 megawatts to the system. Where are we on the Siemens deal? Are we still continuing with the Siemens deal or not? So why is Nigeria's case always different? I mean, Zimbabwe, they've gotten it right. We are saying giant of Africa. We are still looking anyhow. I want to come to Asian markets. And it's a good conversation you're talking about the tariffs. Yes, it might be in China's favor. It might force them to look inwards and everything. But Rotus, one part we don't talk about the tariff is the attendant inflation that comes. Because the truth is, it's American companies that actually will have to pay for those tariffs. That's one part of the game Trump never tells them in all of this lie he lies to them. He talks as though the tariff is in favor of America, but in fact, it is the American company that received those goods that will have to pay for those tariffs and jack up their prices. So why doesn't he talk about the inflation, the attendant inflation that comes about with that price? Why is he keeping all of this truth away from the people? That's just my part.
All right, very quickly, I think it's obvious that I need to go to Zimbabwe. Thank you for highlighting some of the issues happening in Zimbabwe. I think this model is very interesting and initially was extremely unpopular. So ultimately, Southern Africa is going through one of the worst droughts in history. And a lot of Zimbabwe's power is generated through hydroelectricity through the Kariba Dam. Of course, the dam is virtually empty now, and it's only able to generate 10% of the output that it normally does. So that's left the nation in darkness. But I also need to say that prior to that, there were power outages, and that's because our coal-fired plants are dilapidated. They also need to be upgraded. Over the years, there hasn't been maintenance and investment. But anyway, to focus on this, so the government decided that, well, industry and mining sector are taking up the bulk of the power supply. And they felt that, well, if we focus on households as our consumers, we'll be able to carry the nation, and industry, commercial businesses and so forth should figure themselves out. And they were surprised that, in fact, these people were more than excited to go and raise the money that they needed to create their own power generation units for their various, which is where the 3,000 megawatt investment is raised by private individuals, business owners, miners, factory owners. they're raising it for themselves and for their own businesses, and I believe they'll also probably power their communities and where their workers reside. So it was a very painful tariff hike, I have to say. But Rotus, I think the reason why it wasn't as painful. Well, it was very painful, Shah. Let me not say it wasn't as painful. It was very painful because it was almost 300% amid other things. But one thing that we need to emphasize is that the currency is still a very massive barrier to investment. So I think we would have seen more investment coming in and more interest if there was a stable currency, not the gold-backed ZiG that is not performing according to expectation.
Well, Rotus, you talked about oil remaining stable, but I think the bitter fact is that there was some kind of elevation movement in the oil market yesterday and also in the stock market as a result of Ukraine using US-approved long-range missiles, attacking the western region of Bryansk in Russia. Now, global bonds went down. The stocks, particularly in the US, went down, but they nosedived and also, at the end of the day, recovered. What does this tell us? It means that with the escalation of the conflict between Russia and Ukraine, we're likely to have the global economy being affected, especially as Medvedev, former president and prime minister of Russia, says we may be looking at World War III. So the story is not ended yet with regard to oil prices. Bitcoin, I mentioned Bitcoin yesterday in relation to Trump media. Cryptocurrency now is over 94,000 US dollars, almost hitting the projection that by the end of this year, it will be about $800,000, with the hope that the Trump administration will support cryptocurrency. China this morning kept its benchmark rates steady, while reviewing the stimulus measures that it had introduced. 3.1% for the loan prime rate 1 year, which is the one for household loans and corporate loans, and 3.6% held steady for the 5-year LPR, which is what they use for mortgage rates. But the big story today, I don't know whether it's morning yet in the United States, is the report of NVIDIA earnings. Not just the last quarter, I think investors are also interested in how well Blackwell will do, which is the major chip that they've introduced to position NVIDIA properly as the leading artificial intelligence chips company. But when that comes up, we'll see what the story says. Thank you very much, Rotus.